We can start, Aman.
A very good afternoon to everybody who has joined us today. We are back after a break of 1 week and a lot of festivities in between. So welcome to the 14th session of our Back to Basics lecture series. And today we shall be discussing about ensuring compliances. So probably compliance would under GST would be a very broad term, and there are tons and tons of compliances that are required to be done. But what we have done today is that since this during this lecture series we have covered lots of areas in bits and pieces and parts, so we will not be covering those. So what is it that we are going to cover today? Today's agenda. So first we'll discuss about registration and the related compliances. Then we'll move on to returns and return related compliances. After that, we'll discuss about payment of taxes. After that, we'll also discuss about interest on delayed payment of taxes, and we'll specifically cover the latest amendment which was introduced in July 22, which has been given a retrospective effect from July 2017. So we'll discuss that. We'll discuss also e-way bill related compliances. We'll discuss annual return and reconciliation statements. We'll also take up the recent changes that have been introduced for specifically for FY 21-22. We'll also discuss a little more about accounts and records which are required to be maintained under GST. Specifically, if I have to highlight a few things, say suppose for example ITC related compliances, so those have been already taken care of or covered in our earlier sessions which were there during the couple of months back. Then specifically with regards to e-invoice, so that also has been covered by us in probably our 5th session regarding outward documentation. We've also not specifically covered details regarding how to do compliance with department notices, department communication. Because specifically we have a session on that topic itself in the coming month, September. Also, what we've done is we have not taken up penalties because that is also again specifically covered in another session. So here we are today to discuss these agendas, these topics, and we'll take them one by one. However, before going into each individual, what I would just like to highlight is why compliance is important today. So as you all know, the first and foremost benefit of compliance is that it brings discipline in the organization. No red marks, underlines in your ledgers or report cards, no late fees, no interest, no penalties, no monetary loss, unwanted cost to the organization. And that happens only and only if you are compliant. What happens if you're compliant is that you also ensure that you follow the land of the laws. You are following the laws of the land, sorry, and as a result of which all the legal and the taxation requirements, the legal aspect of it, all of them are also complied. As a result, the business is not intertwined or stuck in some other issues rather than focusing on the growing business aspect of it. That brings me to the next importance, which is business development. GST has ensured that business development will now become a separate team itself, and the compliance team will be a separate one. Earlier, probably in smaller organization, you might have one person who looks into multiple things, but because of GST coming into picture, you would now have a separate team for compliance itself, and as a result, the persons who are into who specifically look into the business now can focus, give more attention to developing, growing their businesses. And last but not the least is department's radar. So if you are compliant, there is less chances that you would be under department's radar. You would be caught more often than not, only if you are not compliant. So You would also see notices which are issued regularly to assessees or taxpayers who are not compliant rather than those who are compliant taxpayers. With that, let us start and take up the first aspect that we plan to discuss today, and that is registrations. So, registrations under GST. So, as we all know, it is completely online process, mostly faceless. Only in cases where the department asks for specific requirements or there are details which are not clear, you might have to visit the department. But more or less 99% it is an online process, and you need not visit any department or officer to obtain GST registration. The latest addition is the Aadhaar authentication, which has been made mandatory for at least for fresh registrations and those registrations which opt for claiming of refund. Also, once you have applied for your registration and completed your Aadhaar authentication, the department has been given a very short turnaround time to come back with queries, if any, and if not, it is deemed that you are allotted the GST registration. Once all of that has happened, as we all know, the GST number is a PAN-based number which is specific for each state, and what that ensures is that for each state where you are applying for registration, you will have a different separate GST registration number. And with that, once you've received a registration under GST and subsequently you want to do any amendments, those can also happen easily online itself, and you need not visit any of the departments for the same. So the next aspect under GST registration that we will discuss today is when should you obtain GST registration. So the first aspect, when you cross the threshold limit of 20 lakhs, once you have crossed that, within 30 days you are expected to obtain a GST registration. Now this limit of 20 lakhs has been modified in certain states because the law has been drafted in such a way that states have been given power to increase this limit of 20 lakhs to 40 lakhs. But it is with a caveat that it is only applicable for suppliers dealing exclusively in goods. So in case you are a service provider, the limit for you is 20 lakhs across India. However, for suppliers dealing exclusively in goods, your limit may be 40 lakh rupees for that particular state. The next is there are for some specific category of states. One of the such example is the northeastern states of India. There, the threshold limit is of 10 lakh rupees. So in case you exceed your limit of 10 lakh in those states, then once you cross 10 lakhs, within 30 days, you are expected to obtain GST registration. So another option is that you can voluntarily opt for GST registration from day one of your business. And in some specific cases, like say, for example, successor of a business which has been transferred as a going concern to a successor, the successor is expected to take GST registration within 30 days of the transfer of such business. Lastly, specifically in case of amalgamation, two entities becoming one or one being taken over by the other, or a demerger, one entity being split into two or more entities, in those cases, you are again expected to obtain a GST registration within 30 days from the date on which the registrar has issued we shall discuss when you should not or when you need not apply for a GST registration. Services which are not liable for tax, not liable for GST more specifically. In that cases, you need not apply for GST registration. Or say, for example, you are dealing into some goods or services which are exempt from tax. Say, for example, renting of residential property to an unregistered customer, that is exempt from tax. So in that case, if that is your only service that you are providing, then you need not apply for GST registration. Next category is, say for example, if you are dealing into such goods or services which are liable for tax under reverse charge mechanism, and but naturally you are not expected to pay any tax under forward charge, then in those cases also you are expected to not you need not apply for GST registration. So taking the previous example, say for example, you are supplying services of renting of residential property to a registered person that has recently come under reverse charge tax. So if that is your only services, even in that case, you need not apply for registration because you are not going to pay tax under forward charge. The registered person, your customer, is going to pay tax under reverse charge mechanism. I hope both these points are clear. And the last category that they have also highlighted is that an agriculturist who, to the extent of supplies the produce out of cultivation of land, or to that extent, he need not apply for GST registration. So with that down, what we're next going to do is there are certain categories or certain indicative list wherein it has been said that if such conditions are fulfilled, then you mandatorily are required to obtain GST registration. And those are a person making interstate supply, taxable supply. So if you make any interstate taxable supply, then you are mandatorily expected to obtain GST registration. If you are a casual taxable person, then you are expected to take a registration for making such taxable supplies. So if you are a person who is required to pay tax under reverse charge, the earlier case where we discussed was when you are a supplier and the supply that you make, that is under reverse charge mechanism. Here they say the person who is required to pay tax under reverse charge mechanism. So for example, as a business entity, my turnover may be below 20 lakh rupees, but I have obtained services from a lawyer, and that service is covered under reverse charge mechanism. Then in that case, I am expected to pay tax under reverse charge mechanism, and hence I am expected to first obtain registration and then pay tax under registration and reverse charge, and then do the compliances as it is required in those cases. Next one is non-resident taxable person making taxable supplies. Persons who are required to deduct GST TDS under GST, they are mandatorily expected to comply and obtain GST registration. Person who make taxable supply of goods or services on behalf of another person, say for example, I have an agent in another state who is supplying my goods in that particular state in only. Even though his turnover might be below 20 lakhs, but since he is supplying on my behalf, that agent is also expected to take a registration in that particular state. Input service distributor, they are also mandatorily required to take GST registration. Person who supply goods or services or both through e-commerce operator, they are also required to. So if you are registered on Amazon or Flipkart, then in those cases also you are expected to be first GST registered, and then you can supply goods through those e-commerce operators. E-commerce operators themselves are required to obtain compulsorily GST registration. And lastly, person who are supplying online information access data retrieval services, and they are also expected to take compulsory GST registration. Now with that down, when you should not, and in which cases you are mandatorily expected to take GST registration. Once that we have covered that, what I'm going to do is I'm going to highlight the broad categories of GST registration types, and then I will just highlight the registration process in itself. So the registration types could be normal, which includes two types, regular or composition. So composition taxpayers, they don't collect GST tax from you separately, but whatever the amount they have collected, on that they have to pay a fixed percentage as tax. The limit for the composition opting for composition scheme is also very low. So most of the taxpayers are generally regular taxpayers. Tax deductor, as we discussed, GST TDS deductors. Tax collector, the e-commerce operators, United Nations body, embassy or consulates in India, non-resident taxable person, non-resident OIDAR service providers. So these are the different types of registrations which can be obtained under GST. So what are the details documents which are generally required for GST registrations? So first and foremost, a unique email ID and mobile number for generation of your temporary registration number. Please ensure that if you are obtaining or applying for a new registration, this email ID and mobile number is always accessible, because since the user ID and password are not created, every time you want to log in to complete your registration process or reply to department's query, it is an OTP is sent to this email ID and mobile number, and hence ensure that this email ID and mobile number that you give, that is always accessible. Next, so once you have obtained your the temporary registration number, then the screen that you get are basically divided into basic details of the organization, and in that you are expected to give the details regarding your PAN, date of birth of the organization, date of incorporation of the organization, certificate of incorporation, if you have an importer exporter code, your jurisdiction in which you will fall of the state and the center depending on your place of business, and what is the reason for which you are applying GST registration, whether you are applying voluntarily, whether you have crossed the threshold limit, or any such specific reason. Next tab you get is to fill in the details regarding the proprietor, the karta, the partners, the directors of the organization. So in those cases, you have to give their details regarding PAN, their photo, their Aadhaar number, their residential address, and unique email ID and mobile number for each of them. So if there are 4 partners or say 7 directors, then in all those cases, you are expected to give a unique set of email ID and mobile number for each of them. Next is the set of authorized signatories. So these authorized signatory may be the director or partner or some other individual also of the organization. So in case he's another individual, then in that case you all again need to provide his PAN, his photo, his Aadhaar number, residential address, unique email ID and mobile number, and most importantly a board resolution which appoints such person as authorized signatories, or a letter of authority which is issued in their favor by the directors or the board of directors. So once you've completed authorized signatory, then we move on to place of business, principal and additional. Complete address requires to be given. You need to pinpoint the exact location on a map which is provided by the GST website while applying for registration or while amending the registration itself. So once you enter the PIN code, certain details are by default captured by the system itself. So once you have given the details of the address of place of business, so in case that place premise is basically owned by you yourself, then in that case you need to give a property tax receipt, municipal khata copy, or an electricity bill, and the details as mentioned on these supporting documents should match with the details that you have actually entered for your place of business. Similarly, if the premises are rented or leased, then along with lease agreement, you also need to upload proof of ownership of the lessor or the landlord. Again, here please make sure that whatever address that is mentioned in the agreement matches with the proof of ownership that you supply, and that again has to be clearly and visibly mentioned in the GST registration itself. So make sure all of these details are same, coinciding with each other, so that department officers do not raise queries on these topics again. The next aspect is authorized representative, if there is any. So authorized representative can be a GST practitioner, who is appointed by the organization themselves. After that, you also have details to be mentioned regarding top 5 goods or top 5 services which are provided by the organization along with their HSN code. So once you have highlighted those, The next aspect is that of professional tax details. So again, states, since the GST registration is state specific, these details will also be state specific. So if you're applying for Maharashtra and in Maharashtra you have a PTC, PTRC number, then you have to mention that. The next aspect that comes is Aadhaar authentication by one authorized signatory and one proprietor, karta, partner or director. So that is mandatory. So again, here also you need to ensure that mobile number has been updated in the Aadhaar card of the respective individual, because what happens is the department does not, the GST website does not do Aadhaar authentication based on the mobile number that you have given in the GST registration, but it picks up the mobile number which is lodged with the Aadhaar card, and it picks up the details from there, and that it is matched with the details that you have filled in. So please ensure all the details such as the name and the DOB as in the Aadhaar match with the details that you have mentioned here. If that does not happen, then again Aadhaar authentication is termed as unsuccessful, and then the department might opt for physical verification of the documents and the premises that you have highlighted. Also, once you have also received all of these, you have uploaded these details and you have received the GST registration number, please make sure within the next 30 days of receiving the GST registration number, you upload the bank account details and update your GST registration, so that that aspect of registration is then deemed to be complete after you have updated the bank account details. Also, what we've seen, something which I would like to highlight is that a lot of the assessees, taxpayers who have been migrated from the erstwhile GST, from the erstwhile service tax regime, in their registration certificate, what we've seen is the services HSN code which are mentioned are still the ones which were used under the service tax regime. So I would just like to highlight that those codes are no longer valid. Those codes are no longer relevant. Please update your HSN codes with the recent HSN codes which you are using in your tax invoices and your GST returns. So that updation is required to update your HSN numbers for your services. Okay, so once we've done with this, one more thing that we wanted to highlight is some other miscellaneous aspects, specifically which have been coming up recently or which we have been facing, is that mobile number and email ID on which communication is received from the department should be accessible by multiple persons. So what we have seen is in certain organization, the mobile number or the email ID was given of the individual person, and that individual has left a few months back, a couple of years back, and now that email ID or mobile number is no longer accessible. So what is happening is any communication from the department which has been sent on those mobile number or email ID, they are not being answered or they are not being replied to, and that is being missed by the organization themselves as well. So probably what an organization can opt is that they can give a group ID, say for example gst@xyzorganization.com or whatever their email IDs are. So a specific email ID may be created, and that email ID is accessible by multiple people or the accounts team or the finance heads, so that whenever any communication is received on those email IDs, that is already disseminated by automatic forwards or that is accessed by multiple people. One strange case that we faced recently was that department suspended the registration because nobody was answering the calls or the emails that were sent to the registered email ID, registered numbers. So please take note of that. Very surprising, but yes, this is happening. Also, once you have received a GST registration, you need to ensure that you keep updating the certificate with correct HSN details, update the details of directors, promoters, authorized signatories, place of business if new place of business are coming in or some existing places of business are closed down. So within 30 days of any such change, you need to update the said details on in the GST registration certificate by following the amendment process provided on the portal itself. As we discussed, bank account details are mandatory, which so if you have obtained a new GST registration, that will be deemed to be completed only after you have uploaded the bank account details. Other authentication right now is mandatory only for new registrations and those assessees which are who are opting for GST refunds. However, the option for other authentication by one director and one authorized signatory is has been opened for everybody. So in case even though you might not be obtaining any GST refunds, you can still complete the other authentication process on your own. Lastly, if you are in the process of closing down the business for some reason and you have surrendered the GST registration to the department, so once the order of cancellation has been received by you, then within 30 days of that, you are expected to file a GSTR 10 form, wherein certain details have to be mentioned regarding stock that you have or ITC which is there in the goods and so on and so forth. So in that be the case, then please make sure that you file GSTR 10 within 30 days of such cancellation order which you have received from the department. With that, we have completed the segment for GST registration, and we move on to the next segment, which is returns under GST. So here, as we all know, different returns for different types of taxpayers. Some are monthly, mostly monthly returns, and very few are quarterly, specifically for small vendors. Also, returns have become a critical compliance point. What the department has done is that when you search for a GST registration number on the web portal, it also highlights your compliances, whether you have been filing your GST returns on time, whether you have been filing your GSTR1 3B annual returns, yes or no. So that becomes an indicator for the organization who has searched you or who is looking at you at a potential vendor. So that becomes a critical point. Also, as we all know, if you don't file your returns on time, the recipient's input tax credit gets impacted. So as a result, you are forced to be compliant for your customers. The returns, specifically a few returns are linked with your e-way bills. So if you don't file your returns on time or you don't file them at all, then there is a provision under the law which says that your e-way bill account login might be blocked altogether, and that may be released or unblocked only after you have filed your returns under GST. And also recently, the laws have become stringent, and continuous non-filing of returns, say for 3 months, like 3 months or 6 months, that could lead to a possible cancellation of your GST registrations altogether. So with that background, what are the different types of monthly returns and what is the due date and who are expected to file which returns? So what I've done is I've not gone ascendingly or ascending on the basis of the due date of every month, but what I've done is based on the return forms, I have highlighted that GSTR1 is expected to be filed by a normal tax person, and the due date for that, as we all know, is 11th day of the next month. So for example, for April, the due date will be 11th of the next month, which is May. GSTR 5 and 5A. 5 is to be filed by non-resident foreign taxpayers, and 5A is to be filed by non-resident OIDAR service providers. So for both of them, the GST return due date is 20th of the next month. GSTR 6, which is filed by input service distributor ISD, for them the due date is 13th day of the next month. GSTR 7, GSTR 8, basically tax deductor TCS under GST, TDS under GST, and GSTR 8 is for TCS, e-commerce operator. For both of these, the due date is 10th day of the next month. Lastly, there is so those taxpayers who opt for this quarterly return monthly payment scheme, for them there is one small option wherein if they want, they can file a monthly return which will contain only the B2B details in the invoice Furnishing Facility (IFF), which they have to file by 13th of the first 2 months. So for example, for April, if they want to file an IFF, they need to file it by 13th May. For June, for May, it will be 13th day of June. So for the first 2 months of the quarter, this option is available for them because they have opted for quarterly return monthly payment. So in effect, even though they have opted for a quarterly return monthly payment, by filing an IFF every month, they are again filing this return on a month-on-month basis. However, this option is optional. However, at the end of the quarter, they are expected to file a GSTR1 like a normal taxpayer, and in those cases, the due date is 13th day of the next month. So for a quarter from April to June, the due date will be 13th day of July for such QRMP scheme taxpayers. So we've discussed that QRMPS scheme, but who can opt for them? So what the government is saying is the taxpayers who have an aggregate turnover up to 5 crores in the previous financial year can opt for this QRMP scheme for each quarter in the next financial year. So if you have the turnover of less than 5 crore in say FY 21-22, then for each quarter, April to June, July to September of the next year, for each quarter you can select whether you want to opt for this QRMP scheme or you want to be a normal taxpayer. So with that down and out, the next aspect that we are going to cover is payment of taxes and what is the schedule for payment of taxes. Though GST returns, we have been filing it for now almost 5 years, close to 60 months. Before actually going into the details for payment of taxes, just would like to highlight that GSTR1 and the previous forms that we discussed were specifically related to highlighting invoice-wise details of your outward supplies, or specifically for TDS TCS, those transactions on which TDS TCS was applicable. So that being the case, in those returns, you are only expected to furnish details and you are not expected to pay tax. Tax has to be paid in separate returns. And what are those returns? That we shall see now. So GSTR 3B for normal taxpayers, 20th day of the next month, monthly returns. For those who have opted for quarterly return monthly payment scheme, so they have to fill this PMT Challan 06 on 25th day of the next month for the first 2 months, like we discussed for IFF. Similarly, if there is a payment on account of some internal calculations that they have done with regards to output and inward, then on 25th day of the next month, they are expected to pay tax. So for April, they will be expected to pay tax by 25th of May. For May, they will be expected to pay tax by 25th of June. However, once the quarter ends, they are expected to file a quarterly GSTR 3B return, and that will be filed on 22nd day of the next month after the quarter. And 22nd will be the due date for all the states which are kind of in the lower half of India. So basically your Gujarat, Chhattisgarh, Madhya Pradesh, Maharashtra, Dadra Nagar Haveli, Karnataka, Kerala, Goa, Pondicherry, all of these states being in the southern part of India, their due date is 22nd. And for the states which are in the northern part of India and which I did not mention earlier, for them the due date will be 24th day, if and only if they have opted for quarterly payment. So if you have not opted for quarterly payment, then irrespective of wherever you are located in India, your due date is 20th day of the next month. For composition scheme taxpayers, there is a challan for payment which is called CMP 08 that is required to be paid by 18th of the next month at the end of each quarter. So for April to June, by 18th of July, they are expected to make the payment of taxes under composition scheme. Also, one good point to highlight, GSTR 5(5)(a), non-resident taxable person and non-resident OIDR service providers. And for GSTR 7 and 8, your TDS and TCS under GST, those returns include payment as well. So that becomes their payment schedule indirectly as well. Moving further, the next aspect that we are going to discuss is interest payment under GST. And we are specifically going to look as to what is the new rule 88B that has been introduced for and how interest is going to be calculated. So rather than taking the rule itself, what I've done is I've taken 3 cases, and let's see one by one for each case as to how interest payment works under GST moving forward. So first case is when you have simply filed your returns late. So when a return is filed late, when a return is filed after the due date, interest is going to be calculated on the net tax liability, net cash liability, that is your amount of cash that you have debited through the electronic cash ledger. So here what I've done is taken an example. Say due date is 20th of April 2022. The due date for you have actually filed it on 21st of April, that is delay of 1 day. Your gross ITC gross liability was 50,000, ITC claim 15,000, net tax liability 35,000. There was some confusion whether tax would be interest was payable on 50,000 or 35,000, and now all of that is put to rest. And with this retrospective amendment, it has now been clarified that tax will be payable on this 35,000 only. Your net tax that you pay in cash, on that amount only you are expected to pay interest. So in this example itself, if your gross liability is 50,000, but your ITC claim for that month is 55,000, as a result there is no net liability that you are expected to pay in cash. So in that case, there is no interest liability that is triggered. Only what will be triggered is your basically your late fee of 1 day, which will be applicable in this case. The second case is, say for example, a specific invoice of June 22 that you missed in your GST returns of June 22 altogether, and that you are paying it in GSTR 3B of July 22. So in this case, what happens? So for example, your invoice date is 2nd June 2022. Due date of filing of your June month's invoice was 20th of July. However, you missed to forget in that specific return. You actually filed this along with GSTR 3B of July on 20th of August. The tax value of that invoice was 15,000. Even though for July 2022, your net tax liability was 0, but you are expected to pay interest on this 15,000 amount from 21st of July to 20th of July. That is the date when the tax is due till the date when such tax is paid. So irrespective of your ITC balance of that month, you are expected to pay interest on the entire value if you miss in the respective month itself. So similarly, for any outstanding liability which remains unpaid, this rule has to be followed. Say for example, some invoice of FY 21-22 you missed altogether, and now while doing your annual reconciliation, you identify that okay, XYZ invoice 1, 2, 3 invoices are left to be paid, and if you pay all of those at the time of filing your GSTR 9, then in those cases as well, the interest will be applicable on the entire tax amount from the period when the tax was due till the date on which such tax is paid. I hope we are clear with that. Last case that we are going to discuss is again an interesting one: ITC wrongly availed and utilized. So interest will be calculated from the period starting from the date of utilization of such wrongly availed input tax credit till the date you actually reverse the credit or pay the amount of such tax. So now again the question comes, how do you determine the date of utilization? So for that, what the government has now introduced is that date of utilization shall be considered that specific date when the balance in electronic credit ledger falls below the amount of input tax credit that you have wrongly claimed. So let me explain this with the help of an example. So if your incorrect claim of ITC is 25,000 rupees, which you incorrectly claimed in GSTR 3B of April on 20th of May. So on this 25,000, you will be required to pay interest, not from April, but from the day on which the balance of electronic credit ledger goes below 25,000. So if that falls below on 20th of August, then your interest liability will only trigger from 21st of August. And how we will calculate that, to further illustrate that or simplify what we are just talking about, what I've done is I've prepared this chart which highlights how the interest will be calculated. So for example, as we discussed, in April month, your actual eligible ITC was 2 lakhs, but you claimed ineligible ITC of 25,000. So as a result, you claimed a total ITC of 2,25,000. Your output liability for the month was 1,80,000 rupees. As a result, you have a closing balance in your electronic credit ledger after filing GSTR 3B of April of 45,000. Since this amount is greater than 25,000, no interest liability will be triggered immediately. After filing May's return, the closing balance of your electronic credit ledger is 35,000, which is still higher than 25,000. As a result, even after filing May month's return, you will not be required to pay tax. Sorry, you will not be required to pay interest on this 25,000. Now, in June month, again, your balance or in your electronic credit ledger is still 25,000, which is exactly 25,000 rupees, which was the exact amount of your ineligible ITC. Again, after GSTR 3B of June, you are not expected to pay any interest on this 25,000 because the 25,000 rupees ineligible ITC that you have claimed is still lying in your electronic credit ledger, which you have not utilized as yet. Only in July and August that falls below 25,000 rupees. At the end of July, the closing balance of IT is 10,000. That means of that ineligible ITC that you had incorrectly claimed, you will be so 15,000 has been utilized now in the month of July 2022, and hence you are expected to pay tax. You are expected to pay interest on this 15,000 from July 22's GSTR 3B filing date. Here, please note 25,000 ineligible ITC you are required to reverse. So whenever this ineligible ITC is identified, you reverse that, but the payment of interest will only start from July 2022 for that 15,000 amount, and in August 22 for that balance 10,000 rupees. I hope I have been able to simplify what the government has brought in, and I hope this is clear to all of us. Moving ahead, the next aspect that we will discuss is e-way bills. Though we have spoken about e-way bills in some form or manner, I thought let me immediately take you through with regards to some specific compliance provisions. So as we all know, the rules govern e-way bill rules are Rule 138 of the CGST rule. So any person who causes movement of the goods, they are required to prepare e-way bill. What are the conditions? So the consignment value must exceed rupees 50,000. In some states, the limit has been increased to 1 lakh rupees for intrastate, that is within the state movements only. So please note, in some states this limit might be 1 lakh, and some state it might be 50,000. However, for interstate, that is across the border movement, the limit still remains 50,000 rupees only. In relation to supply or otherwise, and in case if you are sending goods for interstate job work, then irrespective of the consignment value, you are expected to pay. You are expected to generate this e-way bill. Similarly, for handicraft goods, irrespective of the consignment value, you are expected to generate e-way bill for each and every movement. Generation of e-way bill has to be compulsorily done before the goods commence movement. Please note, it is always supposed to be before the commencement of goods, movement of goods. And how do you do that? You fill up the part A details, you fill up the part B details regarding the conveyance, and only after part A and part B both are filled, a valid EVA bill is generated, and that EVA bill is required to be carried along with your tax invoice or delivery challan with the goods, the transporter or the vehicle which carries such goods. So the mode of transportation could be by any of the means of road, air, sea. Road also includes your railway movements. Again, once your EVA bill is generated, no updation is possible except updating your mode of transportation, which might change in between. Also, cancellation of EVA bill is not allowed once 24 hours have been completed from the time it is generated, or the officer has verified in transit. So in those cases, cancellation is not allowed. In most cases also, we would not recommend cancellation of EVA bills. In case movement does not happen, you may document it and keep it with you for future references. So what is the validity period? For every 200 kilometers, 1 day. For every additional 200 kilometers or part thereof, one additional day is given. So for example, if the total distance is expected, that is supposed to be traveled is 300 kilometers, the validity period shall be 2 days. This is for other than over dimensional cargos. So in case the transportation is happening through a dimensional cargo, which is they are huge, say for very huge, and their speed itself is very slow. So in those cases, the limit has been reduced from 200 kilometers to 20 kilometers. So for example, if that distance that is supposed to be traveled is say suppose 200 kilometers by a over dimensional cargo, then in that case the validity will be 10 days, because up to 20 for every 20 kilometers the validity is 1 day. So in which cases you are not required to generate EVA bill? When are the exemption granted? So as we discussed, consignment value is below 50,000, but not in case of interstate job work. Transportation of goods in non-motorized vehicle. So if it is not being carried, taken by a non-motorized, then in those cases you are not expected to generate a EVA bill. So transportation of goods that happen within ICD, CFS in the port area, in those cases also, till you clear the goods, you are not required to generate any EVA bills. Movement of goods within the notified areas, within the custom supervision. Then in cases when the goods are finally or about to go to Nepal or Bhutan and transit cargo movement happens in India, in those cases EVA bill is not required. So in case when any goods are moved which are treated as not a supply under schedule 3 of GST, in those cases also you are not required to prepare the EVA bill. So if they are exempt from tax, again you are not required to generate EVA bill. And lastly, if the goods that are transported are also outside the purview of GST, for example, alcohol, liquor for human consumption, petroleum crude, then in those cases also you are not required to generate EVA bill. Please note that this is a generic exemption list. There are some other cases as well. However, we have not taken because they are not so relevant or not so practical or that are used in our day-to-day businesses. So as we were discussing, when can you do an amendment? So say for example, for any reason like say for example a breakdown of your vehicle, and you are required to move that goods in those vehicles to another vehicle and then further take the goods. Then in those cases you are expected to update your EVA bill, mention the reason as breakdown of vehicle, and give the details of the new vehicle, and generate the amended EVA bill and carry forward the goods ahead only after amending your EVA bills. Again, in case of transshipment, as we discussed, it could be possible that the goods are first traveling or being transported through aircraft, then by road, or from vessel and then by road. In those cases also, you need to update the details with respect to the mode of transportation by which it is going. Along with it, you also need to mention the receipt number, whichever be the case, depending on the mode of transportation. With that, we have completed e-way bill section as well. The next one that we will now take is the annual compliances. First one that we will discuss is the GSTR 9 annual return, which is expected to be filed by every taxpayer whose aggregate turnover is greater than 2 crores. For 9C, the limit is a little higher, that is 5 crores. So if your turnover is between 2 crores and 5 crores, you are required to file only GSTR 9 and not 9C. In case your turnover is greater than 5 crores, then you are expected to file GSTR 9 and 9C both. And for composition scheme dealers, GSTR 9A is required to be filed, and that is again the due date for all these three returns is 31st December of the next year. So again, this limit of 2 crores and 5 crores that we have been discussing, that has to be seen for each financial year. And right now, what the government is doing is, in the GST law, there is no such limit, but by notification for each year, they are specifying this limit. So it could be very much possible that moving forward, 2 years down the line, next year also maybe, these limits are reduced substantially, and please keep track of these limits for each financial year. So if moving forward next year there is no such notification issued, then probably all the taxpayers would be required to file 9 and 9C in that case. With that, one more aspect regarding annual compliances that I wanted to discuss today was what are the key changes for financial year 21-22 vis-a-vis your 2021 compliances. So earlier, if there was any non-GST supply, then the government had given a relaxation that such details could be clubbed together with exempt supplies. However, moving forward from 21-22, non-GST has to be disclosed separately, if any. Also, you can continue disclosing nil rated and exempted together under exempt supplies directly. One key important change that has come, which is that of mandatory HSN table for our outward supplies. So in case your turnover is less than 5 crores, then 4-digit HSN code is compulsory in your GSTR 9. And in other cases, mandatorily you have to disclose outward supply HSN details at 6 digits from FY 21-22 onwards. With respect to GSTR 9C, there have been no changes. So as the practice which was being followed for FY 2021, the same can be continued in FY 21-22 as well. With that, we come to the last section, that is accounts and records. What are the accounts and records that are required to be maintained at the principal place of business in each state? So what the law says is you need to maintain details regarding inward and outward supply of goods and services, including your invoices, delivery challans, all such supporting documents, details regarding your input tax claim, output tax payable and paid details, stock of goods, manufacturing details, and so on. These details have to be available at the principal place of business of that particular state. Accounts pertaining to additional place of business must be available at that additional place also, in addition to being available at the principal place. So for a state, the principal place should have all the details for that particular state, including that of additional place. At additional place, you can have details regarding that specific additional place of business only. So again, having a computer access may suffice. So if being at additional place of business, using your login IDs, you can access the system and have these details readily accessible, then those conditions are automatically satisfied. So what is the time limit for which you should keep these records? So the law says you need to keep these records for 6 years from the date you file annual return for that specific period. So yeah, a long time. So for example, we filed the first annual return for 2017 in January 2020. So in that case, you will be expected to keep records for FY 17-18 up to 2026. Yes, 2026. Further, if there is any case appeal which is going on with regards to particulars of that financial year, then until and unless that case is closed, and even after such case is closed, 1 year you need to maintain those books of accounts records as which has been prescribed under the law. I hope we have covered all the aspects that I intended to cover. Thank you everybody for joining us. If there are any queries, we have received a query. So the query is, sending 2 lakh value of goods, red chili for job work within the state of 50 kilometers distance, is e-way bill required? There is this notion of there is some exemption for 50 kilometers. I would like to just clarify that this distance of 50 kilometers is only if you are sending the goods from your premise to a transporter's premise only, and from there further movement is going to happen. However, for all other purposes, even if you and your customer or if you and your vendor are within a distance of 5 kilometers, 10 kilometers, you are required to pay, you are required to pay, sorry, you are required to generate an e-way bill irrespective of the distance, unless there is a specific exemption in that state. So in some states, the value of goods may be 1 lakh. In some states, what they have done is they have specified that intra-city movements are exempted. So you need to just keep in mind all of that. But in this case, I feel yes, e-way bill will be required, replying to the specific query that was asked. With that, I think we can close the session, and we shall meet again next week with a new topic. And yeah, with that, thank you everybody for joining in. Thank you for such a patient hearing, and take care. See you next week. Thank you.